Let's welcome in our next guest, talking more about the market and when we could see a bounce back. The low on the S&P 500 today is 55.28. But tech has been beaten down, and Ken Mahoney seems some opportunity. Ken Mahoney, CEO of Mahoney Asset Management. Thanks for being here with us. So, you know, we wake up and sometimes we see some up arrows in the morning and then they're gone. Some of your thoughts on what's going on here?
Well, those up arrows, I feel like we're in this movie Groundhog Day, a funny movie with Bill Murray, but not so funny as an investor, that overnight you wake up hundreds of points. You saw those little arrows, as you mentioned, Nicole. By 10 a.m., something hits. We get a little green on the screen. That looks like, oh, man, we get out of this pickle. And only to sell off in the afternoon. And the psychosis, wake up the next morning with, I got you, babe, I share. You know, so this is what we're going through. It's all around the tariffs. And I think the Fed, I think really Trump overplayed his hand here. I mean, look, we all want a deal also, but I mean, look how much uncertainty has now taken place in the market. And I'm not sure that's a fair trade to take, you know, a couple billions from Canada for tariffs versus the trillions of dollars lost in market capitalization. So, you know, these algorithms, Nicole, as you know, they feed off these headlines about tariffs. And here we are. Now, again, our opportunities when, you know, our opportunity as an investor is when we have these, you know, kind of forest fires to go picking most of the rubble. But, you know, we have to understand where it came from, where it stemmed. We're cruising along pretty good. And this, you know, kind of doubling down and quadruple down on tariffs is not a good look. It's not working. And it's scaring a lot of investors.
And look, even today, right? So we just got the headlines a short time ago that the Ukraine was ready to move forward with peace and work with the United States. And now they're saying that they hope Russia now is ready to do so as well. And the market came up off the low. In fact, jumped about, you know, has been moving higher by about 50 points, now 60 points up off the low. You know, could that have been the bottom today?
Again, it's always hard to know. One thing that we key on, and we ask your viewers to take a look at too, is the volatility index, known as the VIX. Sitting here at 28 is not a good position for investing. Again, I long for the days like in 21 where like 12, 14. Before this whole mess started, the volatility index was like 15 or 16. My point is, I like to see that come in a little bit and give us more confidence. But there's nothing wrong with double, you know, kind of dollar cost averaging a little bit here. You know, finding your best names, and you know, whether we have a bottom in or not, it's hard to know. It probably doesn't feel like this. I feel like we need some capitulation, Nicole. It's kind of like, you know, it's almost like a steady decline and everybody's getting kind of used to it. I think we need like a big washout, and I'd be more comfortable to kind of say, okay, that seems like someone's waving the white flag. That feels like a capitulation. So I'm not sure we're there yet, but also I'd like to see the VIX come lower. But there's also nothing wrong with kind of dollar cost averaging on your favorite ETF, stock, fund, whatever it is of your choosing.
Right. I mean, and I'm certainly not playing devil's advocate like yesterday was it. You know, capitulation where you have that panic mode and some real big moves. And I mean, the VIX at one point was up over 25% yesterday. You had a name like Tesla down 15%, MicroStrategy was down 16%, Microchip, Palantir down 10% each. So it was kind of a monumental day yesterday. That does not mean that that was it, you know. Right. But it did feel like it was enough that people started calling me, and they haven't been calling me with the worries. It was enough to say, gee, when does this end? Why is this the worst month since 2022? You know, in the meantime, when it's going to bounce back, and you're saying dollar cost averaging, you said you better be in there. So Apple, Microsoft, Nvidia, these are your picks. Should we start buying them today and buy a little each day? Is this going to be the tech bounce back?
I think it will. Look, I know they have not been leaders in some time, but you know, when you come through this forest fire and everything is upside down, you know, money doesn't jump into small caps or international or some of those areas. It goes to the most liquid names, the names that we know have good earnings, have good balance sheets, that are buying back stock. You know, that brings us to those stocks, you know, Nvidia, Microsoft, and Apple have quite a bit of market cap with the NASDAQ and the S&P 500. So I think, you know, when people start like kind of picking at things, they want to pick at things that they know the company, they know that the stock's taking a hit, but they also know there's a lot of liquidity. So for some reason, big institutions jump in and the market doesn't follow through. They know there's a bid there, they could jump out. That's not true with small cap and some other type of investments, you know, coming out of this malaise.
Understood. And do you like all three of them equally, Apple, Microsoft, and Nvidia?
It's close. I would say I like Nvidia the best. The forward-looking PE, again, we don't use PEs, that's rear view mirror looking, but the forward PE for Nvidia is 25. Historically, it's like 35 to 40, meaning that the earnings are going up and the stock price is going down. So that's kind of the pick of the litter. Apple today is having a very difficult day, obviously. Again, you have 2.4 billion users. You know, you can really monetize 2.4 billion devices, Nicole, right? And then finally, Microsoft, you have all those verticals. You know, you have gaming, you have cloud, you have Windows this, Windows that, Windows Teams. So, you know, those are the three horses that people feel most comfortable to, where money, I think, will go back into first. Eventually, we go up the food chain of risk, but to start with, coming through this really difficult time, I think you know those companies, especially again, 2.4 billion users of Apple and 1.2 billion customers of Microsoft. I think that's where money's going to start going first.
Understood. So I'm thinking, as you say, tech. Is there another sector that is your second favorite sector?
Yes, and that'd be financials. I mean, I look at JP Morgan, the best of class. Jamie Dimon doesn't get better than that. And the stock just getting hit and getting hit. Same thing with Goldman Sachs, another, again, Wall Street favorite. That stock is also getting hit pretty hard. So I think the financials are overdone. I also think technology is overdone. I think all of it's overdone. But certainly I would say, you know, you could look at financials, JP Morgan, Goldman Sachs as another group of area that get hit pretty hard during this downturn.
You know, and also earlier this morning, I heard someone pick some of the same names. Apple, Microsoft, Nvidia also had Tesla and Palantir in there. I'm not implying that those are your picks, but I've heard people saying that these names have been beaten down. It's time to get into some tech. Some of it maybe could be contingent on what the Fed does or doesn't do, or no?
Right. So those two names, again, we like those names, but you really have to have the stomach for it. This is someone to invest in. It has to be a really aggressive client. We get the story of Tesla, the sum of the parts are greater than the whole, but we also know that Musk has done a pretty good job alienating about 50% of the community that would buy their cars. So again, it really has to be all the charging station, it has to be other businesses that they have to make up for the growth of robotics and so forth. But you have to have the stomach for it. We have a lot of clients that don't have the stomach for a stock like that. And Palantir, I mean, great. The numbers have been great. They're beating numbers, estimates, and so forth. But that's been the poster child of the great growth we had this year up until middle of February. And it's also been a poster child to take profits as well. I think they know what they're doing over there. They've been in AI before. We even called it AI with government contracts, now commercial contracts. But again, you really need the stomach. That's why I picked out Microsoft, Nvidia, Microsoft, Nvidia, and Apple as those companies with you know big balance sheets and probably a better bet right now at the moment than go up the scale of risk right now, which Tesla and Palantir would go quite a bit up the risk where we are.
Ken Mahoney, great to see you. CEO of Mahoney Asset Management. Thanks, Ken, for joining us on the show. Thanks.
Thank you.